Traders in the building, what's going on, guys? Welcome to another one. So today's video is about SMA and EMA. For those of you who don't know what that is simple moving average and exponential moving average, right? I'm making these videos and I'm referring from babypips.com. The idea behind is that you find information on YouTube and you find that information delivered in a way that is not really the way they received it, right? These gurus, what they normally do is they would go to babypips.com, learn the knowledge, take the skill set and learn the knowledge, and after they've learned everything, they will then create their own courses, and then in their own courses they will obviously twitch here and there for copyright reasons, and they will give you what they think is good enough, yet they are not telling you where they got the information from. But others, they tell you. And so in this video and in this channel, we are actually getting our information directly from babypips.com, right? So yeah, today's video is about that. And if you want to see other videos, I have a playlist that I call According to babypips.com, and I've been exposing all these information from babypips directly. It's unlike when you get it from someone, a third party, they tell you we got it from, and here we just reading it all together. So as you can see, it's babypips.com, and you can go and research on Google. You're gonna find the exact information. That's if you want to read it on your own, right? So today is about SMA and EMA, right? And then you see how they said with this thing, they didn't say SMA and they said versus, meaning it's a comparison between the two, right? And this is something that many traders struggle with. They would use the moving averages but not understand what they are really and what they serve and how they can use them to their advantage. But because of this video, we are going to then know what they are. So let's start by reading. They say, by now you are probably asking yourself, which is better, the simple or exponential moving average? So this is war between which one is better, the simple or the exponential. It's almost the same thing as which one is better between fundamental analysis and technical analysis or sentimental analysis. It's almost the same thing. There's always an argument against or an argument for, right? Then we continue here. It says first, let's start with exponential moving average. And then they say, when you want a moving average that will respond to price action rather quickly, then a short period EMA is the best way to go. So now they are telling you this. Now they say the short term EMA responds it responds to price action quickly, right? It responds to price action quickly. This is the short this is the EMA, short period EMA. It responds to price quickly, right? And then we go on. They say here at the lower level, these can help you catch trends early, right? So they're already telling you by this time that the EMA, the exponential moving average, can help you catch trends early, right? That's the exponential moving average. And then they say in brackets, more on this later, right? Then they say, okay, these can help you catch trends early, which will result in a higher profit, right? In fact, the earlier you catch a trend, the longer you can ride it and take in those profits, which is, we all know that, right? If you get in an early, you get an early trade entry, you are most definitely going to have some time on that trade, holding it. It's unlike when you catch it when the move has already been done, right? Then they say the downside of using the exponential moving average is that you might get faked out during consolidation period. And now, like any other thing, it has an advantage and a disadvantage. The advantage here is that you get to catch the trends early, very early, but the disadvantage again is that you may get faked out during consolidation period. So those are the things we need to look out for, right? So just a short summary: if you want to see if you want an indicator that rather responds quickly to the trend, is the EMA, right? And a short period EMA, right? They help you catch the trends early, but you can get faked out during consolidation period. I guess we all caught that. And as we scroll down, here. They say you may get faked out during consolidation period. They say because the moving average responds so quickly to the price, you might think a trend is forming when it could just be a price spike, right? Then they say this would be a case of the indicator being too fast for your own good. So they are telling you now that the reason for a fake out is that the moving average responds so quickly to price, so much that when it maybe confirms you for a setup, you might think it's buying and only to find it was just a spike, right? Because you know sometimes fundamentals may kick in the market and then we get those price spike and you find yourself in a fake out, and if you didn't use proper risk management, you could even blow your account at that time, right? And we continue. They say with a simple moving average, the opposite is true. So what they mean by this is that since the EMA exponential moving average helps you catch the trends early, the SMA might not help you catch them early, but you might survive from fake outs, right? Because it doesn't move in that fast. I don't know, it's not instant in its approach. I guess that's the right way to use. Then they say when you want a moving average that is smoother and slower to respond to price action, then a longer period SMA is the best way to go. Remember, if you want a moving average that will respond to price instantaneously, like right now, it's a short EMA. But if you want a moving average that will respond at a longer period, then you need to find a longer period SMA, right? That's what they're telling you here. They are pretty much the opposite, right? Then they say this could work well when looking at longer time frames, as it could give you an idea of the overall trend. So they're telling you now that the SMA can help you on the longer time frames, as it can help you determine the overall trend of the market, be it's going up or it's going down, right? And then now we are here. They say although it is slow to respond to the price action, it could possibly save you from many fake outs, right? Can save you from many fake outs. The downside is that, so this is the flow, the downside is that it might delay you too long and you might miss out on a good entry or the trade altogether, right? So far from what I've read, I can say there's really not one that is better than any, because both of them have an advantage and they both have a disadvantage. The EMA has an advantage that you can catch trends early, and the disadvantage is that you may get faked out during price spikes, right? And then the SMA, which is the simple moving average, can help you determine the trend of the market, but the problem is you might miss on entries, right? You might, by the time it shows you the trend, the market has already moved, so you couldn't enter for that trade. The setup has already been complete. So I guess the best way to use them is to use both of them, meaning you are going to enter using the EMA exponential moving average, the short EMA, and to determine the trend you can use the long period SMA, right? Yeah, right. So we are continuing to the next page. They say an easy analogy to remember the difference between the two is to think of a hare and a tortoise. So this is what they're telling you now. They're telling you that the simple moving average is like a tortoise, and an EMA is like a hare or a rabbit, if whatever you call it. So you can take a screenshot of this in case you want to remember it, right? And we continue to the downside. Now that we have pictures, we can already imagine how it is, right? Then they say the tortoise is low, like the SMA, so you might miss out on getting in on the trend early. However, it has a hard shell to protect itself, and similarly, using SMAs would help you avoid getting caught up in fake outs. Right now, they're telling you the disadvantage and also giving you the good side of it. They say it's low, you might miss out on getting on the trends early, but it would help you avoid getting caught up in fake outs, which is a good thing, right? We don't want to be faked out. So they say, on the other hand, the hair is quick, like the EMA. It helps you catch the beginning of the trend. It helps you catch the beginning of the trend, but you run the risk of getting sidetracked by fake outs. So this is the risk. You can get early trades, but you might also be exposed to fake outs or snaps if you are a sleepy trader, right? Then they say below is a table to help you remember the pros and cons of each. So the pros and cons is advantage and disadvantage, right? So I will highlight with this one. This is the table that we have here, and let me try to break it like this. I don't know if to break it like this for us. Yeah, I tried. So the SMA, the advantage of the SMA is that it displays a smooth chart which eliminates most fake outs. That's the advantage. And then the disadvantage is that it's slow moving. That's the disadvantage, which may cause a lag in buying and selling signals, right? So the word lag means it delays in a way, like you will always be late. You will always be late, which is not good, because you need to be as early as you can, right, in the market, so you can ride the trends. So, and then they say EMA, the advantage is that it's quick moving and is good at showing recent price swings. It's quick moving, and it's good to show you the most recent market structure, most recent price swings. And then the disadvantage, which are the cons, more prone to cause fake outs and give errant signals. So in this one, though, it's too fast to a point that you might get many fake outs. So let's then go continue reading and see how we can then be able to use both of them, right? So then we go back to that question. So which one is better? This is the question you're currently having already in your mind. And then they say it's really up to you to decide, right? And if I may intervene in this one and try to help you, using both of them in my perspective would be better, because you would use the EMA, the short EMA, for entries, and you would use the SMA, the long-term SMA, for to see the trend on its own, and to be able to hold your trades using them both. And then they say it's really up to you to decide. And then they go on, they say many traders plot several different moving averages to give them both sides of the story. What I just said, they might use a longer period simple moving average to find out what the overall trend is, and then use a shorter period exponential moving average to find a good time to enter a trade. Exactly what I just said. So yeah, man, this you can take a screenshot of this. They are telling you now using both of them is actually something that is recommended, as other traders have done it before, and probably because it's here, maybe it is proven to be working, right? And then as we go on, they say there are a number of trading strategies that are built around the use of moving averages. In the following lessons we will teach you, right? These then are the trading strategies: how to use moving average to determine the trend, how to incorporate the crossovers of moving average into your trading system, how moving averages can be used as a dynamic support and resistance, right? And I don't know, I think I should stop here with this one. And if you want to know how to use these moving averages, you can comment down below. Maybe how, just comment how in this video, and I will go on. The thing is, I don't want to make long videos. It will become boring, and for other people it would become discouraging to watch, as it's too long for them. So if you want to know how to use moving averages to determine the trend, how to incorporate the crossovers of moving averages into your trading system, how moving averages can be used as dynamic support and resistance, just comment down below how, and I will definitely post a video. If I can get maybe 10 hows, 10 people who are going to say how, then definitely a video on that one will be coming. So thank you guys for watching up to this far. If you like this video, please do give a like, subscribe to the channel, turn on the notification bell. It helps the channel, it helps me a lot, it gives me encouragement to keep on posting. Thank you guys for watching. I love you, and bye.